The bull market is back on, ladies and gentlemen. That ETF ticker that left yesterday from BlackRock, it is back, according to this post, Watcher.guru, and he shares on the site, the Depository Trust and Clearing Corporation, that it is in fact back up on here. What does this mean for Bitcoin price? Guys, it's been a roller coaster the last couple of days. Bitcoin rallies on fake news that the ETFs were being approved. Then we find out that was a lie. But then we see a ticker symbol pop up over on this site, the DTCC, appearing from iShares Bitcoin. People go nuts for this, and the price shoots up to $35,000. Then yesterday, it comes back down. Oh my gosh. Now, the price didn't dip that far, but people got scared. We're going to look at the charts and kind of look at the timeline of that happening. But there's another thing I want to bring your guys' attention to, a post that was made. If I can go over and find it here, give me just 1 second. If you go over here and look at a post made by Wolf of Alt Streets, a very good follow for anyone who's watching here on anyone who's on Twitter. I commented on this yesterday, but we had some more news break out last night after hearing that this ticker came back on the DTCC, hearing that the ARK Invest Spot Bitcoin ETF is also listed on the DTCC now, and that the BlackRock ticker has been there since August. So what is happening here, guys? A lot of people flourishing, coming into Bitcoin on exciting news. They're buying, but then every single time things are looking great, we start to see something that's like, all right, this maybe isn't as picture perfect as we thought. What is Bitcoin price about to do? We're going to talk about that in this video. So make sure you go ahead and smash that like button and hit subscribe if you love Bitcoin, if you love crypto, and if you've been really excited about the last couple of days of pumping and you want to see it continue. Let's talk about what could happen there. Now, before we jump into the charts, there's one more thing, and I don't want to damper your hopes too much, but there was a thing coming out yesterday before, we got to 66, but people were saying, oh, the FOMO's not too great. We are up now to 72 on the Bitcoin Fear and Greed Index, even though we moved to the downside yesterday. That means the FOMO is here. Definitely something that does not kill, by no means does it kill all the bullish momentum, but it's something to keep your eyes on, because when you go back and look historically at these levels, could we be seeing something maybe similar to what we saw back in June of 2019, where we skyrocketed not only up into the higher 70s, we ended up going here in July late June, all the way up over 90, up to 95 on the Bitcoin Fear and Greed Index. Or are we following something more closely related here to February of 2020? It's really hard to tell, but what I do know is, especially more recently, this is the highest we've been in the year 2023, but the price is the highest we've been. But when we get to these types of levels, we have been in a spot that you want to start being careful about entering too many new longs. With that said, though, the price is still doing some interesting things. Now, 3-daily chart is what I'm looking at right here, ladies and gentlemen. You guys know we've talked about this before. We're getting the overbought flashes, and this is the one probably that if I was a bear trying to continue make the story that we can't go higher, you are going to see when you go back in time on the 3-daily chart. This has been a chart that, again, there's no such thing as perfection with any indicator, but you're going to see reversals coming almost every single time you get a flash. Even if it has to delay just a little bit more, there's almost always some sort of pullback after these reversal calls. I'm just kind of scrolling you guys through even the last bull and bear market. It doesn't really matter what market it's in. Every time we've gotten these flashes, reversals end up coming in one way or another, even during bull market. So keep your eyes fixed there. We're seeing overextension on 3-daily, 2-daily, daily, 4-hour. It's the lower time frames you see a little bit of hope. But let's take a look there. Let's go all the way down, guys. I have been the last couple of days watching the 10-minute chart like a hawk. A lot of movements I've been seeing happen. We're seeing at the moment a breakout of a falling, broadening wedge. Now, these usually break to the upside, so I'm not necessarily surprised to see this happen. But there's been a lot of chaos here after hitting 35,200 early on Monday morning, late Monday night. On the 23rd, we have been moving in a bearish trend. And to be fair, in reality, I think we kind of need to get back up here to kind of cancel out the bearish trend. Probably need to get at least back to 34,800, and let's start seeing if we can conquer those levels. You will see there's been, again, almost no volume except for where we start to make these dips. This dip, just a significant pullback. I don't remember if there was any news hitting at that time. This wick right here was when we saw the news came out that that ticker had been removed from the DTCC. Again, I think that whole thing is really insignificant though, because that ticker had been up there since August. I don't think that we should be using any of that as an indication of a Bitcoin ETF coming sooner or later. That's just BlackRock getting ready. That does not impact Gary Gensler, the SEC, and their decision making whatsoever. In fact, I still think we're looking at more than likely earliest January, but more evidence coming out. They might be able to kick that one down the road and wait until March. We do know they want to approve almost all of them probably around the same time to diminish any advantages that one would have over the other. But again, we're looking at short-term price action right now. What can you guys be expecting? Now, while I do have this little pattern here, the reason why I'm talking about we need to break probably 34.8, maybe even break 35. And again, I think we need to see another significant push to potentially cancel out what would be like a little Bart Simpson pattern. We've seen this Bart Simpson pattern happen even more recently. One of the peaks I want to kind of bring your attention to is the left shoulder. Again, this head and shoulders did not play out, but I'm still going to call it the left shoulder. The price action we had back here in April, you will see we had a little bit of a Bart Simpson pattern back here. Again, that's where you hit a new level of high for the year. You trade sideways, you make one more good peak maybe, but then you ultimately end up keeling back over and moving the downside. Well, what do we happen here? We moved up really explosively. We ended up coming up here to about 30,500. And then this push we made just a couple of days later pushed all the way up almost perfectly, just right above it, but right to about $31,000. Why am I saying this? And why am I comparing potentially this situation? Because when you move out to the daily chart, you guys will remember who have been watching the channel for a long time, despite the fact that we didn't get here back in July, I had heavily been calling for $36,000 using the Fibonacci levels. This would be the 0.382 level from the top of the bull market down to the bear market bottom. And you can see we're getting really close to it. In fact, the other day when we hit 35,200, that means we're about $800 away from it. Well, going back to what I was kind of discussing there, if I were to go to the hourly chart here, if we did something similar to what we did back over in, April, again, we come up, get close to it, we have a little bit higher wick, but we're trading sideways here. Would it not make sense to maybe have a day, being this close to this level, maybe pop up and touch that level, turn around, come right back down, and continue to trade sideways before retracement comes? Now, could we go higher? We absolutely could go higher. I'm not saying any of this to try to kill a future rally. Right now, we're in very, very bullish territory where we could come up to 36,000. If you were to go back out and look at fixed range volume profile, while we do have the 0.5 level all the way at 42, I think that's asking for a little much right now. But again, I would have said the same thing about 35,000. Realistically, if 36 is broken, what I'm kind of keeping my eyes on is a pocket, a level right here at about 38,800. That is the next level in this valley of volume. Yeah, we have a little bit of volume increasing here around that 36 as well. So another reason to kind of look at that area, but that's still low volume. You don't really see an uptick in volume till closer to about 37.8, and then you have that peak sitting right there at 38.8. So that's, when I'm seeing the confluence of things happening there, I'm kind of looking at that and saying, all right, interesting spot for sure. By the way, you're also going to be looking Fibonacci extension levels, another defense or another reason potentially to look for 36,000. Let's go ahead and grab this. Come down to the bottom. Let's zoom in here. We did reject right about at that 1.5. You guys look right here. It's a little higher than 36, but the extension golden pocket sitting up here about 36,200. Another level, very, very interesting to watch. Now, I say that. I think that we can make that push. I think that that's not even necessarily that bullish of a push. A bullish push would be up towards that 38. But when we're talking about potential pullbacks, that's the next question everyone's asking. Some of you guys are holding on. You're asking, should I continue to wait out to take profit? Some of you have taken profit, like me. I've taken profit at this point. A little lower than I would have wanted to, but we're waiting hey, when is the next good buy? Because if you've been in the space long enough, you do not buy when you're seeing charts like this. You do not buy when you've had a massive rally. And again, we're looking here at the daily chart. I know I have two lines right there, but 3 green candles like that, this is not the time to be FOMOing in and adding to this number right here, this 72. You're waiting for a retracement of some kind. The question is, where would that go? Now, I'm looking at this. I said this yesterday. You do not like this look. You do not like this red wave that was mostly moving sideways and you blast through it. Historically, when that happens, we go back here over into January, we had a pretty significant pullback right here. In fact, even though we ended up double topping a little higher, we ended up pulling back somewhere around 20% with that one. You guys can see, let's see, continue to go back. It just doesn't happen that often is the first thing. You have the one we had back in January of 2021. This ended up being about a 30% pullback. So I do believe a pullback is coming. Now, the question is, where does that happen? I do think that we're going to see this red band continue to move to the upside. It was sideways, but I think the bullish pressure is going to make it come to the upside, in which case, more than likely, we're going to see price kind of fall, get a little sideways back into it. The couple levels that I'm looking at, I'm keeping my eyes on and saying, hey, interesting spots to watch. First of all, you have this red trend line. Let's take down this. Once again, you have this red trend line that continues to rise. We've retested it once, but potentially do we just retrace and stay around $33,000? I'm a little less likely to believe that one. The one that I think is more realistic is coming back down to the high of July or potentially even the highs of April right here between about $32,000 and $31,000. If we don't get truly bearish news, if we just retrace because people are taking profit, I think you're going to be asking for a lot to go lower than $31,000. Now, if something flips, if there's maybe news from Gary Gensler that they're a little stiffer than people want them to be, and they've found some problems with the ETS filing, and they're going to have another excuse to delay, now potentially we're talking about lower. If we see maybe Jerome Powell, who, by the way, speaks today, really interesting to hear what he says at 4:35 p.m., if he comes out and says something super bearish or says, man, we probably need to raise interest rates, then you're potentially looking at something that sends us lower. If we go to some full-out, blown-out war, which, of course, there's 2 wars happening right now in the world, over in Ukraine and in Israel, there are things on the horizon that could bring bearish pressure in, but you can't bet on them before they happen. Let's continue to watch here, but I think a normal pullback would be to about $31,000, $32,000 area, and then maybe that's a good place to be gobbling up some more Bitcoin supply. But continue to stay vigilant, continue to keep your eyes on the charts, on the news, because anything is possible in this season. The explosiveness has come, and while we've cooled down for the last 24 hours, that does not mean we cannot restart it here again very, very soon. Guys, on your way out, smash that like button, hit subscribe. T-Shroom is going live with your morning news here in just a couple of minutes, so make sure to stay tuned at 9 a.m. Eastern Standard Time for that. And then, of course, we have our live stream today at 3 p.m. where we'll kind of wrap up the day. We'll look at what price action did. We'll look at any breaking news. At this point, everyone's on the edge of their seats waiting to see what happens next. We're with you guys. Make sure you are subscribed to the channel and hit that notification bell so you don't miss a single video. You guys have a fantastic day. Adios.